Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. Let's run the numbers. Bitcoin is currently trading at 43,534, down 5.02%. Ethereum down 7.26% to 3191. Yesterday I was talking about using the charts to actually tell the story of the news. Notice here that Doge is down nearly 16%. Let's look into that. When we look at Doge, it had a news spike. It's since lost everything that news spike caused. What I'm trying to say is that when you go from the news, you're going to get sucked in to buying at higher and higher prices, and then the professionals will dump that particular crypto that you're holding. This is absolutely normal in the crypto space. One of the things that you've really got to be aware of, you need to buy on red, not buy on green. Rule 138, all investors become traders every time they buy or sell. A lot of concepts out there when it comes to investors. They like to hodl, hold on for dear life, and it feels like that. It's an absolute roller coaster. But there's a problem. Where do investors actually sell? Rule 224, traders and investors, same action, different mindsets. Traders buy, investors buy, traders sell, investors sell. They both do the same thing. But they have different mindsets and also different focuses and levels of knowledge. For example, traders understand that they can turn a small percentage, and that can take something that is quite small and turn it into something that is quite large when you compound it. Traders also understand BORSOG the magnificent price eagle. What is BORSOG all about? BOR is buy on red, SOG is sell on green. And buying on the red and selling on the green is incredibly profitable. When you look at the market like this, if you look as a trader, you will see so many opportunities here. This is just a beautiful shopping day. It's almost like the stores, your beloved stores, have gone on sale. But if you're an investor, it's really stressful. The key is to combine the strengths of both. There's a scientific process to trading, and crypto technical analysts scientifically track investor attention. Investor attention is measured by price, which is reality, not future promises. Investors focus on future promises, but the reality is they may occur significantly down the path, and you may suffer large losses in between. Crypto technical analysts start by marking up their charts with the CTKS method. They check the stock markets and world events. They collect probabilities just like a detective would do. They go back inside the crypto market, find the market's focus, understanding that opportunities reset daily and enhance their pattern recognition. They have a real wealth focus, and real wealth is incredibly important. It's all about the actual rules of money. There are different rules related to losing money, making money, and keeping money. The focus of all crypto technical analysts is to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. The concept is we're not greedy people, and we're not focused on money. Money is simply the stock in trade. It's like a grocer. The grocer understands his produce is what he's selling, but he's not in love with the produce. He recognizes it's something to deliver value to other people. And only after all of this do we buy and sell with specific methodologies. What actually happens when people lose money? They don't worry about any of these things. They just go straight in. They light switch and they say, "Oh, this looks really good. It's going green," like Doge. And I'm going to go all in and more. For example, looking at Doge just on a daily basis, it came up 27.2% and then it gave all that gain back. Traders are incredibly disciplined. They've got a lot of patience and they have a real wealth focus. Also, they understand the dynamics of the crypto that they're looking at. They concentrate their focus. They understand interrelationships between markets. They can make probabilistic decisions as well. And above all, they have a lot of rules which guide their behavior. One is buying at levels of support below the current price. Not just going all in and trying to pick the bottom. That's a very big cause of stress. There are numerous rules the crypto technical analysts actually apply before entering or exiting trades. But one thing, guiding principle, is Rule 45. No alt can escape Bitcoin's gravity. Masterclass students, you'll get a copy of this live chart in TG34. Yesterday, we were talking about, is Bitcoin coming down into A, B, C, D, or E? We can see it came down into A. Now, what drove that? But before we do that, just understand that no alt can escape Bitcoin's gravity. That means when you're looking at your beloved alts, Bitcoin's gravity is either crushing the alt or lifting it up. And the alts move with greater percentage variation than does Bitcoin. That's what makes all the alts really attractive. The reason that you need to understand where Bitcoin is going, if you do not understand, you do not know where your alt is going. Your alt does not exist independently of Bitcoin. Its fate is tied to it. I'll quickly show you how that gravity works. This is Bitcoin. It's coming down at the moment. See this price action? We call it Bitcoin's fingerprint, and that's in this blue line. Across Ethereum, notice how Ethereum is being influenced by Bitcoin's gravity. We can see Binance Coin. Bitcoin's gravity is pulling Binance Coin down. XRP is being pulled down. Cardano being pulled down. Solana being pulled down. Luna being pulled down as well. AVAX being pulled down. A lot of people say, Ken, what happened to my beloved alt? I always say, Bitcoin happened to your beloved alt. Naughty Bitcoin! So you can see it's absolutely critical that you raise your perspective about your beloved alts. If you're only looking at your alts, you will get crushed sooner or later because you'll basically mistime the market. So the question is, what influences Bitcoin? Let's draw a really interesting line up here. Look at this white line. Look at Bitcoin's price action. Do you think they're reasonably related to each other? Please let me know in the comments. This is the NASDAQ 100. This is the stock market. So the stock market throws a gravity on Bitcoin. It throws gravity on the crypto market. That's rule 225. Bitcoin cannot escape the stock market's gravity. Again, so many people do not know this rule. Just knowing this one rule can save you an enormous amount of money, an enormous amount of stress as well. A lot of people talk about crypto being a different market to the stock market and the bond market. Of course it is. But the concept is crypto is really, really tiny. This is $2 trillion of global capitalization, just as a benchmark. Stocks around the 120 trillion and bonds around the 123 trillion. Stocks and bonds interdependent movements on each other. These are connected. What hope does little cryptocurrency have to decorrelate from the main markets? A lot of people push this narrative, but I can say after 30 years inside financial markets, and of course coming from a finance background, this is crazy, and I don't know why people say it. They're just leading people astray, I believe unknowingly, but it is the case. When we look at cryptocurrency, it is the ownership layer of Web 3.0 or the Internet of Money. We literally have decades and decades of growth potential inside crypto. Crypto will accumulate much, much more money. It's going to grow and grow and grow. It's going to do really, really well because it's the next internet. And the internet of value just doesn't have, for example, like one company, Google, which is nearly $2 trillion. Google is nearly the market capitalization of cryptocurrencies as a market. One day we will have cryptos valued into the trillions of dollars. No doubt about it. It's just part of the adoption cycle. And we are literally at the beginning of this. So we can see that there's definite correlation between the NASDAQ 100 and Bitcoin. So we need to understand the stock markets better. And there's a few things to understand, and we do deep dives on this in the masterclass. The first thing is the fear gauge. The VIX was absolutely plummeting down and down and down. I've been saying for a few days, it really needs to rebound up, and we've seen that. This is really good. This is healthy. This is what we require. We look at the market and say, but Ken, the market's gone red. We don't want this red market, do we? The answer is absolutely you do. This is what tips the percentages in our favor. When we buy falling knives, we're buying like institutions buy. And the institutions always say, don't buy a falling knife, because they are. So what we've seen, fear is now increasing in the main market, which is suppressing price for the NASDAQ 100, and this is what we overlaid on Bitcoin. There's an inverse relationship between fear and price, just like in the crypto market. When fear actually goes up, the VIX comes down. It's like an inverse measure of fear. And we've got a fear gauge inside the crypto market as well. But what we're seeing here is an incredible rally, just a monumental rally in the NASDAQ 100. It must come down to a level of support to be healthy. If it doesn't do that, it can drop precipitously. It is a big problem when things don't, well, for example, oil. We can see oil just crazily took off. People around the 125 level were saying oil is going to 300. And I said, be really careful, everyone, because we do have people that trade in the stock market. I said, you can expect a pullback to long-term support. And that's exactly what happened. This is a very, very important thing to understand about financial markets. You do not want to get on the wrong side of the percentage. You want to be riding up this percentage, not riding down your losses like this. And we saw the same thing with gold, and I said exactly the same thing. Gold is overextended. It will in all probability come back to a long-term support, and that's actually what it's done. This is always happening inside financial markets. Don't be conned by smart money, institutional money, to getting sucked in to going all in and more when you see it is green. That is not how professionals act. And my goal is to make you a professional, to give you the tool set. When we look at bond prices, this is all about economic concern. Bond prices are going down, bond yields are going up. The dollar is getting above resistance. It's starting to break out, and we can see that's put pressure on gold to reduce it. We also see the inflation rate starting to come down. This is really good. This actually gives the market momentum to go higher. A lot of people talk about the Fed and hawkish comments and increasing interest rates more than expected. Actually, there's a window that smart money will use to absolutely rally the market. As a crypto technical analyst, you understand the dynamics of the market, not just crypto, but what impacts the gravity of the crypto market. It's absolutely critical to understand that. So we can see that the NASDAQ 100 is starting its retracement, and it's a really, really healthy retracement. Therefore, where do you think Bitcoin's price is going to next? Do you think it's going into, well, it's already in A, so we'll tick the box on A. Do you think it's going to B, to E, to C, to D? Please let me know in the comments. And if you're a little bit shy, you can just put B or C or D or E. Just try and pick one of them. We have a little bit more data that we can add to this. What are the shorts doing? They're starting to get a bit more confidence. Why is that? Because price is coming down. They're starting to get certainty, but they've been very, very uncertain for quite a long period of time. And what are the longs doing? We can see the longs are actually coming down, and they've been coming down for quite a while. They're still in a downward trend. Maybe there's a bit of a turnaround here. Maybe people are starting to say, this is not bad. This is starting to deheat to a degree that I would be interested. To understand what's happening with longs and shorts, and we know friends don't let friends leverage trade, so we're not going to go there, but we certainly need to understand it. This is all about being a detective inside the crypto market. Oh, sounds so cool. When we look at 24-hour liquidations, 462.66 million across 151,894 positions. That's up a lot, up 50% on yesterday. And we can see for the past 24 hours, about 87% of liquidations were long liquidations. What are we seeing? A big spike in long liquidations. But always remember, shorts get liquidated along with longs. There's always short and long liquidations. Doesn't matter what. And many times people lose their entire portfolio because they hedge. They go long and they go short, thinking they've boxed in a specific return. Actually, they'll probably wipe out their account in both directions because crypto is exponential by nature. It's not like the stock market and it's not like Forex. It's a completely different animal and it's really volatile. Both the longs and the shorts are very certain of their position. They're certain it will go one way and not the other way. Look at this. Over the past 24 hours, around $500 million in wealth was lost. Please don't be part of that elite group of people who just consistently lose money. We want to help you to become more of a financial blessing to yourself and those you love. The first place to start, just run away from leverage. Run screaming to the door. Just leave it behind. It's nasty stuff. Another data point that we can use is the Crypto Fear and Greed Index. And I like looking at it like this because I want to show you the correlation. A lot of people look at crypto fear and greed in isolation. And I think that's really doing a massive disservice to everyone. As a former statistics lecturer, first and second year stats, you always want to see consistently reliable signals. It's just not good enough for people to say, trust me, this works this way. I see it all the time on YouTube and it turns me green. I think to myself, these poor people that are watching this advice, it's just simply not correct. That's why crypto technical analysts have integrity and decency at their core. When we focus on maintaining a positive excellence life trend, integrity, decency, and kindness, they're not optional extras. They're absolutely mandatory. And you need integrity because as you become more and more influential, people will rely on what you're saying. You need decency to think of other people first. And you need kindness to put yourself towards the back and other people towards the front. When people come from a scarcity mindset, they wouldn't ever think about doing these things because they say, it's a win-lose situation. I either lose or I win. And the person on the other side does the opposite. That is not true. Under real wealth, it's always a win-win situation. Real wealth is all about abundance. And if you look at nature, nature is totally abundant. We've put limitations on our thinking that actually say to us that the success we can have is limited. That's absolutely not true. You can have unlimited success, but you need to do it in a specific way. That's what real wealth is all about. We can see the red is fear, and when it gets really low, this is a massive amount of fear. The green is optimism. When there's a massive amount of optimism, people are really greedy. They're in. I like to say they're just optimistic. So optimistic, pessimistic. What's happening now? We've seen a level of pessimism that drove prices down and bumped it around. But optimism returned into the market. It hit a peak and now we're starting to see fear again. Of course, and we know why. It's the NASDAQ. Naughty NASDAQ. Aggregated open interest also has some really good signals. You want to have specific signals as a trader that are consistent. I've seen so many people talk about so many different signals and you just can't trade on them. And crypto technical analysts know how to deconstruct if something is tradable or not. Now, a lot of investors say, well, I don't trade. You're going to trade when you sell. eventually. And you don't want to trade at the wrong time. Every investor needs to know how to trade. If you don't know how to trade, you're absolutely losing money. Absolutely. Because the problem is, when people see this negative red, they capitulate. This is where investors go and leave the market. You don't want to be doing that. You want to be adding to your position in these red areas. The redder, the better. You basically want to turn yourself into a very sophisticated investor. And a lot of our community members just put a portion of their portfolio into trading. And they have a lot of fun doing it because they actually understand how to invest more effectively. And that's really, really important. So when we look at aggregated open interest, there is a very good association with aggregated open interest and Bitcoin's price. And we know we're looking at Bitcoin's price because Bitcoin's a bit of a bully. He's going to shove your alts around. So you need to know when the incoming problem is because you need to protect yourself. When we look at this aggregated open interest, we can see it's starting to raise up. This is actually not a bad thing. It's not decreasing. There's a level of support that is being maintained. We have to keep our eye on it because we could lose that support if the Nasdaq comes down more. But the concept is this is not looking too bad. Let's look at the top 7-day percent gainers. We've got MENA at 14.65%, CVX 14%, NIA 9%, ANC nearly 9%, Cello 8.5%. Wow, they're just plopping around all over the place. Audio 7% and Luna 1%. What you will see is that there is always a time to take profit. What's this guy down the bottom? Who's that? Oh, that's Waves. You can remember Waves and who's this fella? ZIL. Waves and ZIL were absolutely going bananas last week. They had incredible gains. Now they're leading the bottom of the pack. Please let me know in the comments, what is this telling you? What rule? A critical thing with rules, you need rules to get into zone 3, which is the patience and the rule zone. This is where we ditch certainty, we ditch conflict, we ditch worry, we ditch anxiety, which is all about zone 1 and zone 2, because those rules are the rules of losing money. We get into the making money zone, and this is the courage zone, but we need to get into the mastery of fear zone, the fulfillment zone, which is zone 4. Many people get into zone 3 and then lead very, very empty lives. They have all the money in the world, but they do not have real wealth. There's a difference between riches, which is very showy, and wealth, which is very quiet. Please let me know where you think Bitcoin will go, B, E, C, or D, for the next video. And what I would like you to keep in mind, the current price is 43,159. This particular box around B, 42,889 to 41,258, is quite favorable. I just wanted to let you know that I actually drew this particular chart in on the 26th of March, this particular bounded area. So around 11 days ago, I was suggesting that the probabilities were that Bitcoin would move around this zone, get pinned in above 38,579, and go further up towards the 50,000. No matter what way the market is going, if you learn how to trade, you can make money in down markets, up markets, flat markets, any market. Unfortunately, people who have the retail mindset can only make money in bull markets. I would like to change that. I would like to give people the opportunity to have more financial abundance in their life, no matter what state the market is in. Professionals always make in advance probabilistic choices. We have a strategy. We are going to have integrity and decency and follow through on our word. If price goes down, we know what we're doing. If price goes up, we know what we're doing. If price goes flat and goes meh, we know what we're doing. And this is really, really important. Retail investors and traders generally pick one direction and they stick to it, not understanding that all three directions are possible. and there's always a probability that things will move against you. That's why we need to look in 3 directions. Rule 4, which I find is the most important rule: price moves in waves. Price moving in a wave means that price literally just does move in a wave. For example, the VIX. The VIX is always moving in a wave. It's going up and then plummeting down, going up, collapsing down, going up, collapsing down. This is what the VIX does. And it does it inside all particular financial instruments. This is just the way. Price is always moving in a wave. When you understand this, this is such a powerful rule, and people don't tell other people about it. So what happens when price moves down? People say, oh, it's going down forever. This big thing just means, okay, it's over, Bitcoin to zero. And then they don't realize that there's a wave following, and little waves all the time, up and down and up and down. When you understand Rule 4, you will definitely be more of a financial blessing to yourself and those you love. You should always think about rule number 4 before you place any investment or any trade. And we know all investors become traders anytime they buy or sell, so it's good to have the knowledge of what to do. Unfortunately, we're getting a lot of scammers in the comments, and they are always dealt with by our administrators and by myself as well. But please, if you want to get in touch with me, you can directly message me on Twitter. My Twitter link is in the description of this video. You just go down to show more. If you want an 80% off for the CryptoTradingKS Masterclass that teaches you how to be a crypto technical analyst, just click this 80% off. That will take you to an ambassador page where you can reach out and contact whoever you like. The concept is this is a verified link. And you can always reach out and directly contact me too. I'm always available, and I love to hear from our community. If you're going through a life pullback at the moment, I just want to let you know that our community's love and healing thoughts are with you. You're not alone. There's always hope, and the sun will come out again. The greatest threats that any investor and trader is subject to is self-doubt, and especially self-sabotage. But when you know life is always waiting for you to be ready for abundance, this is a change in mindset. It's a real wealth mindset. And this is one of the rules about how to make and to keep money. Rule 570, psychology sets profitability. Please let me know in the comments how you've found a knowledge of real wealth and maintaining a positive excellence life trend. We have such an incredible community. It's just wonderful to see so many comments, so many people bonding with each other. We truly have a globally extended family. And if you're new to the channel, please reach out and just say hi. We'd love to say hi to you. With a professional mindset, a day like today is exciting. It's something that we look forward to. So that is something to look forward to if you're feeling fear or any form of anxiety at the moment, or stress. I hope you found the content useful. Please consider sharing and liking this video, and also subscribing to our wonderful community. We'd love to have you here. Thank you very much to our moderators for keeping our community safe from scammers, and to the CTKS ambassadors for mentoring masterclass students, and of course a very big thank you to you for watching and for being part of our global KS family. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, such as the tax software I use, and links to the CryptoTradingKS Masterclass. Please go to the links in the description of this video to find the 80% off link to the ambassadors. You can always reach out to me directly by Twitter as well. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.